always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Ray Dinero, and we are back at it again with another episode of Crypto Portfolio Updates. I am excited, as you can see in the title, that hopefully got you in here. We're going to be doing some crypto portfolio updates, but we're also going to be talking about some stuff a little bit outside of the crypto market. And I've been a little bit slow to get to that on this channel because I talk about it literally everywhere else. But, you know, when it's relevant, it's relevant. So we're going to talk about that here in a little bit. I want to make sure everybody is tapping on that like, share, and subscribe. Give me all the free support. Most importantly, especially for those of you that are rocking with me that are tapped in, sharing the video, get me out into the algorithm. Let me take a look, see here. Where are we at subscriber wise today? So I always got to say it because we're trying to get to 100, not to 100, to 500 by the end of the year. And that would really be a good deal for me. We are currently sitting at 397 subscribers as of this episode. So everything that we can do to bring some more eyes, bring some more attention. Obviously, I don't know. It seems like people just jump on a panel, have a hot conversation, and then they have a bazillion subscribers and their channels just immediately monetized. I go to work for like 50, 60 hours a week. And I actually don't have to be here. I don't even know that this is a goal. Like anything that you're doing, you should be good at it. We'll put it that way. So I do want the channel monetized so I can at least get like a coffee or a Monster energy drink or a beverage or something for this as I'm doing it, as I'm giving out these gems, because I am not up here selling stuff. I don't have merch. I do not have a Patreon. And I got plenty of people that tap in with me that have met me through this avenue for free all week. So because I love talking about crypto and I love talking about money. And on this channel, I get to do both, documenting my journey because I am for sure not rich. Freaking arms are sore right now. We've been doing some manual labor, getting jacked. But yeah, so share the video. Like help me out. Like that would be awesome. Also, if you're looking for other ways to support, down in the description, I have some referral links down there for some of the products that I use personally. And all that jazz. We're going to jump into it because this one's going to be a little bit longer because I have some strategic positions to talk to you guys about. So let's go ahead and jump into it. As of this recording, make me a micro machine. This isn't about me. It's about the crypto, baby. As of this recording, Bitcoin is in the process of a rebound. You know, we went down as low as 109. We are back up to 114. Didn't even take 2 weeks this time. It was basically a week. Ethereum, which dipped a little bit below 4,000, is back up to 4,147 and 17, or 4,147 and 25 dollars, $47.25. Sorry, which puts us at a Bitcoin dominance of a even 57%. Ethereum dominance is at 12.5%, and gas fees are 0.154 Gwei. Moving on, we're going to steamroll through this part of it to get to the good part, because I also don't want this video to be forever. We kind of stream along through here. I'm going to start trying to add some stuff to the end of these videos because it'll give me some, well, I don't know. I don't necessarily need to add anything, but like I want to give as much value as possible and give my opinions when they're on topic. So these videos are generally pretty short. I want to keep them short, sweet, and to the point. But I also want to be able to add value, context, and my opinion, because why are we here if we're not giving our 2 cents? Because obviously this is not financial advice. This is just some guy talking on the interwebs. And you should probably consult somebody, I guess, with a piece of paper, because that's what they tell us to say. But, you know, Anyways, talk to somebody. Go find an adult. Or be an adult yourself, whatever. But yeah, always do your research. Never believe somebody just because they said something that you saw on the internet. And yeah, let's keep it moving. Top 3 trending coins as per CoinGecko. Shout out to CoinGecko for this wealth of information and a key staple of this show. At number 1, we have Aster. At number 2, we have Plasma, and at number 3, we have Avantis. And I am so far removed from the altcoin space that I know nothing about any of these coins. Like, that's just where we are. Moving on, let's get into it. We're going to go ahead and jump into the top gainers, top 5 gainers and losers in the last 24 hours. We are recording this Tuesday, September 30th, in the evening of our Lord. Let's get to moving out. The first and foremost, we always start with the top gainers, and I hope everybody gets an opportunity to get on this list. It feels good. It feels great. It is vindicating. It is the ultimate pat on the back that says you were right. At number 1, we have a rank 341 SQD with a gain of 69.5% in the last 24 hours. At number 2, we have it rank 385 Atom 1 with a gain of 59.2% in the last 24 hours, 59.4 live updates, people. I love it. Things are going on in the market. I see you guys moving money. You're moving my list. At number 3, we have a rank 663 Avalon with a gain of 57.1% in the last 24 hours. Oh, geez, this might be a little bit low. I'm hoping that was not a little bit low. I turned the volume up, but we're gonna keep it. We're gonna keep it pushing. Like we're trying. Like obviously, my microphone got touched. At number 4, we have at rank 959 Dress Dio with a gain of 38.7% in the last 24 hours. And last but not least, at number 5, rounding out the list of the top 5 gainers for the evening, we have it ranked 805 Degen AI or Degent. Agent AI. Yeah, that's how that goes. And with a gain of 33.7% in the last 24 hours. Moving over to the top 5 losers. I hope you guys don't end up on this list, but if you do end up on this list, I hope it is because a coin that you were eyeing is presenting you a good, solid entry point. Or if you're in the process of DCAing and you find yourself on this list, you get to buy a little bit extra this go round. Let's get into it. At number 1 on the top 5 losers, we have at 600, rank 616, Open Eden with a loss of 68.1% in the last 24 hours. At number 2, we have at rank 268, Anoma with a loss of 47% even in the last 24 hours. At number 3, we have it ranked 766, Monbase Coin with a loss of 30.2% in the last 24 hours. At number 4, we have it ranked 952, ZK Verify with a loss of 28% even in the last 24 hours. And last but not least, rounding out the list of the top 5 losers, we have it ranked 732 UX Link with a loss of 20.9% in the last 24 hours. Whew, got a whole thing going there. Let's see here. So we're going to jump over another. Or you know what? Let me do the thing. Interesting. Okay. Hold on. We're going to bring this down for a second. That's weird. Not letting me go over anymore. Oh. Okay. So we're going to, why did we not get to open that in a new tab? What are we doing? Oh my God. This is ridiculous. Okay, there we go. Goodness gracious me. We are having technical difficulties. Okay, so moving on. going to give a little bit of context before we jump into the bull run portfolio. Let's see what we got going on here. We are currently down 0.9% over the last 24 hours, which puts us in the red to the tune of 17.6%, which is still an improvement over where we were just a month ago, which was above 20%. Let's go ahead and jump over into this and do the rundown. At number one, as far as the holdings for our active portfolio, obviously this is not all holdings. My predominant holding is Bitcoin, followed up by Ethereum, followed up by Chainlink. This is the active portfolio. This is where we tried to outwit the market. This is where we tried to beat the hurdle rate of Bitcoin. This is where mistakes were made. We are still in the red and have yet to be proved right. But, you know, win or lose, we give the real context over here, because this is what real portfolios look like. Like, this is over a year's worth of work, and it's just currently down 17.9%. Like, it's not fun. That's a good grip of money for what's over here. So, you know, it's not all rainbows and giggles. Fortunately, this thing does produce a little bit of income. So there is that, which we are using at this juncture to just throw into our Bitcoin holdings. And yeah, let's go ahead and keep on going with that. So at number one, we have, in position number one, we have Solana. At number two, we have Ethereum, ETH. At number three, we have Thorwallet DEX, TGT. At number four, we have Aave, AAVE. At number five, we have Jupiter Perpetual Liquidity Provider Token, JLP, always a mouthful. At number six, we have Radium, RAY. At number seven, we have Superverse, SUPER. At number 8, we have Injective, INJ. At number 9, we have Avalanche, AVAX. At number 10, last but not least, right out the list, we have Akash Network, AKT. Now, those are the top 10 holdings in the active portfolio. Obviously, we have a lot of Solana. That's been doing well. That's been probably one of the main reasons that this portfolio hasn't just been utterly obliterated. And you know, we played in the mud, got dirty. It's just what it is. Like, I would have been better off trimming this down to my top 10 that I have now. Actually, I guess my 2 cents on this. My top 10 that I have now, I would have nixed my injective position. I would have nixed everything that wasn't up here. Like my Thorwallet DEX position, that was a good stalwart. They still don't have the coin that this is converted over to, so that's just holding place. But I would have gotten rid of everything in this portfolio except for Aave, JLP, Radium, Solana, and Thorwallet DEX, and Superverse. I would have kept that. Literally everything else. I would have kept the Chainlink. And I would have probably put more into GMX, and yeah, I would have got rid of everything else, honestly. In all honesty, I would have just only had the 10 positions. And moving forward, if I'm playing in the altcoin space or in DeFi ever again, I don't know. I might just be building up cash positions to buy more of the stuff that I'm going to be holding for forever. My crypto investment is about to get very focused, very, very focused moving forward. And I can say that with 100% certainty, because this is the last time I got to ride this wave. I just, you know, after you get to a certain level, there's levels to this. And I think this is my last year hardcore into DeFi. Does that mean I'm not going to have other holdings outside of Bitcoin, Ethereum, and Chainlink? Absolutely not. But I won't be back. I'm just going to say that, because I'm not trying to strike it rich tomorrow. I don't need to get rich tomorrow. And the altcoins that I'm into, that's what I'm into until the data says otherwise, until the numbers say otherwise. There's just no need for me to mess around with other stuff. Now, once this bull run gets kicked in, and I'm going to be beating my chest because I'm going to be back in the green, because I do believe this portfolio is going to find its way back into the green. I'll feel better, but the conversation is still going to be the same. Like I'm making more income in a high yield, which we're going to be talking about here in a second. And then I'm able to roll that into buying some Bitcoin so I can get the Bitcoin faster. Because unfortunately, I am not a high income earner outside of my high yield, which paired with my W-2 puts me in a category that's a little bit, it's more acceptable. If I was just going based off my W-2 income, I'm a Dusty. If I was just going based off my high yield income, I'm a Dusty. So if you take two Dusties and put them together, though, you get one high value man. And so that's what I am. I'm two Dusties put together. It's like a transformer. Like I went and I made it so that I didn't have to physically go side hustle. I mentally go side hustle. But right now, we are at Dusty levels per these YouTube streets. And I accept that. But I'm two Dusties, which is way better than one Dusty. It's like you get two Dusties in one package. You get two incomes. And one of the incomes, I really only have to mess with about maybe 30 minutes a week at this point, managing it. I do look at it incessantly all day, but like I don't make moves all day. I have a couple of days a week. My Tuesdays are a big day. Monday, I got a little bit of work to do, moving around some money. Tuesday, I got a little bit of work to do, moving around some money. And Friday, I got a little bit of work to do, moving around some money. Usually, that total is about, I'd say it's my porta potty time. On my lunch break at work is when I do most of my moves. I go to the bathroom, sit in there and relax. Actually, there's no relaxing in a porta potty. It's always either super hot or super cold. It never feels good. It never feels good. Porta potties never feel good. And for those of you who work construction, you understand what I'm talking about. It's either cold or it's hot. And it's like you just in there sweating. But I go in there because I got some privacy. I got to worry about nobody looking over my shoulder. Either that or I go sit in my van. And, you know, I make the moves that I need to make the adjustments, check my portfolio, see how things are doing. I've gotten into a groove where I like to make moves around lunchtime, with the exception of when I'm redistributing dividends. I like to do that as soon as they come in. That's just me. So sometimes it's first thing in the morning, like right at market open. And sometimes other times I'll forget and then I'll just wait and do it around lunchtime, which is when I'm used to making moves with my money. But that said, I'm just making more money in that space as far as income, which was the whole premise of jumping into the altcoins is, outsized gains. And then you can roll that into Bitcoin. Well, yes, but not for everything. And this portfolio is a great example of that because we're in some popular plays and some of them have worked and some of them haven't worked, but the haven't worked has been not working hard. And that's kind of where the issue is. So, you know, you're waiting for those to get on board. And this bull run is a little bit different. So yeah, that's kind of where we're at. So jumping over into our next thing, we're going to close it out with this. How am I turning Bitcoin volatility into income? Those of you who watch all my shows, you already know what I'm about to talk about. Those of you who don't, I normally don't talk about stocks or holdings or any of that stuff on this channel, but it's becoming more and more relevant because being in this field, in this space this year, at no point in any of the previous bull runs did I come in looking this god awful. That's going to be my first thing that I'm going to say, just having been here for over a decade in the crypto space. DeFi was never this bad coming in, like into the bull run. Like right now, we were beating our chests and making videos and talking trash, telling people that they're stupid, volunteering to get laid off, which I still volunteer to get fired darn near at least once a week. But it's for different reasons. Like I can afford it now. But during the last bull run, I could also afford it, and it was wonderful. And this one is very, very lackluster for where we're at in comparison to where we were. And I don't like it. I don't. It's just not great. Like I'm excited about what we're getting ready to talk about, but this is a waiting game that I'm just like, I would have been doing much better if I had this money all sitting over in my high yield portfolio and I was just buying Bitcoin. Like my debt guarantee would have been paid by now with what I'm making off this, because I would already be making more than what I'm making going to my W-2 job, which would make my career my side hustle. That's the goal. And I'm not at a point now, even having over a Bitcoin, having the small amount of Ethereum that I've got. I'm not at a space where I could live off my Bitcoin. Like, even though I have over a whole Bitcoin, I wouldn't want to try to live off of it right now. Like that would just be stupid, in my opinion. So what we're doing is we are shifting focus to kind of make it so that we can get out of having to go to work, because then you get to choose what work you do. And you're not doing what you do because you have to. Like, pretty much the only thing you need at that time, I think it's, what do they call it? Barista fire, where you can just go get a job for insurance that has good insurance and just go get on there and, kind of coast, because you're making enough money. So the money isn't the priority anymore. I'll be there in another 22. Yeah, by the time this plays, because Happy Hump Day, this is going to be the 1st of October. Spooky season is upon us. 22 more months, and I will be at Barista Fire, which honestly, if I don't need insurance, I don't need the baristaing either. But we're going to talk about how I turn Bitcoin volatility into income. And what I do personally, my strategy that I'm currently obsessed with is high yield. I am a big user of high yield. We currently, obviously, a bunch of you know that I was a big Misty advocate. And the more that I've learned as I've gotten into this space, I treat it just like Bitcoin. I look at high yield as a safer form of yield farming. And that's because being in DeFi, being in crypto for over a decade and actually using the platforms and using DeFi, it's super risky and it's kind of annoying, and you kind of have to do a lot of work. Like, it's a lot of work. And the pay at this juncture isn't even better, which also sucks. So you're doing a lot of work and you're making less than what you can make in high yield. And like, that's the reason I'm like, this is probably the last year that I'll do this, because now we have tools. We have tools in the traditional financial markets to be able to generate that income and do less work. Like, I'd rather do a cumulative of 45 minutes a week and be pulling in darn near $1,000 a week than do all the work of having to chase these farms. I'm watching crypto prices. Are you within the range where you're getting paid? Are you locked in a ratio where you're getting the best yield for your buck? It's daily. Like, that's DeFi runs 24/7. It is annoying. It's just an inefficient use of time if you have to go to work, which sucks. It's the same reason that I can't really do options trading or a lot of the other stuff that people are talking about where they got time. I'm like, I'm physically doing stuff all day and I'm tired. Like, I can't stop and be in the markets to like make my trades. Like, that's like, unless they're long dated. Like, and there's some people out here in these YouTube streets that I follow that do longer dated, slower moving. You're not in the markets in and out every day, making the money that day. And I'll be looking into that probably in the winding down 12 months, because I'm gonna want to stack on some other income into what I'm doing as well, because we ain't trying to secure all the bags. But overall, I just don't have the time to do it as actively as I should. And like, you don't look at your yield farm for for a week. Something could, like, you could just be sitting with nothing. Like, stuff goes down fast. So that said, we offloaded our Misty position, not because the NAV went down, but because the distribution went down with it. And my portfolios are set up to be producing income. I'm actually using those portfolios right now to pay off debt. And in order to do that as efficiently as possible, me personally, I have a high risk tolerance. I don't have a high income dropping tolerance. Like the NAV didn't bother me. It was the actual drop of the distribution. And I've got a video that's coming that is literally over that transition. But we shifted it out. But the portfolio in and of itself, my primary portfolio, is Bitcoin focused. Now, I'm a nerd. I do theme portfolios. It's my thing. So the majority of positions in my portfolios, like I'll have a foundational position, which for all my portfolios at this juncture is Ulti moving, and then I'll have everything else around that be part of the theme. So for my primary portfolio, it is crypto, Bitcoin portfolio. So all my high yield stuff in there are companies that hold Bitcoin on their balance sheet, basically, or just Bitcoin related things. So Misty was the primary holding in the portfolio. That was the other issue when the distribution dropped and tanked the way that it did. It drug that passive income percentage down, which is something that I do look at like a hawk. That is actually my focal point for my portfolios, is that when it comes to income. If I'm looking at income, all I care about is that passive income number. I'm not really worried about like what's going on to get there in most cases. So if the passive income number starts dropping, I start having problems and heart palpitations and I get upset. Outside of that, the other metric that I really go by is each position has to pay a certain amount. And so that's another thing that I gauge. But if it's something that I'm going to hold on to longer term, then if it drops, if the distribution drops a little bit, but I'm still within my passive income range, I just buy up more of that position, which drags down my cost average, puts me in a better position. The other thing is I am looking like a hawk for NAV erosion, which by definition is a distribution or a dividend payment, and the price goes down because they have to give you something. They're giving you the money, and there's the whole conversation. They're just giving you the money you already gave them. And I'm like, well, then they're doing a really good job of it, because the money that I gave them, that money is still pretty much there, more or less, save 10%. But I look at those payments and I am watching. That's one of the things I do watch like a hawk, is when they pull that payment, is it recovering the distribution, the dividend? If it is, then I don't have anything to worry about. If it's going down with the market, it's going down with the market. Now, having been in crypto and I've seen stuff go down 80% overnight. The little dips here and there where I can go check and see what the market's doing and be like, oh, so the whole market's down? Okay. Like, I understand why my thing's down. But people will get on these Reddit forums and they'll get online and be like, never, you're losing all your money. This is stupid. I'm mad the number went down. And I'm just like, well, okay, cool. I'm just going to keep collecting these checks, paying off this debt, and then, I guess we'll see if it's there, because it's stuff I can afford to lose. Like, I'm not gambling with the rent money. Like, I could pay my stuff out of the W-2. It's just much easier to put my W-2 into a brokerage account and buy as much more income as I can, and then use the income to pay for everything else. That's the goal. And within 22 months, I should be at that goal. Actually, I should actually be at that goal before 22 months is up, because my paycheck is indefinitely shrinking, because as we get through this consumer debt, once the consumer debt's gone, I really only need X amount in my paycheck to like show up in my account, because everything will be getting paid by the dividends. So how do we do that? We're going to jump into this. I'm going to run through it real quick. I will do in-depths on these, but the first position that I got after I got my foundational position, which for those who are wondering, if you're not watching my other shows, you should be watching my other shows because it's all over the place, is Ulti, UTLY, by YieldMax. Great fund, great weekly payer, very hotly contested. People have all sorts of feelings and opinions about it. And having been in and out of that position throughout the year over the past 12 months, I've experienced both ends of it. And you know what? It's doing its job for right now. And I can always roll it into one of these other positions that I like a whole lot. And we're getting more tools regularly that are going to be giving us some opportunities to get really efficient in this income game. So there's always stuff I can roll into if I need to, but I am watching it like a hawk. I do watch my positions like a hawk, but I don't have to worry about 24-hour 80% drops. I don't worry about that with my high yield stuff. And that's something that I look at every day, but I don't wake up going, oh, geez, am I sweating bullets? Am I going to have to like sell off this position quickly because it's dropped 80%? Like, am I trying to beat the wave? And it's like, I don't worry about that. So my first one is from Granite Shares. It's one of their yield boost. It's their yield boost Bitcoin ETF, which is XBTY. For those of you who want to take a look at it yourself, always do your own research. Currently sitting at 1935 a share. I am down about 8% right now because Bitcoin went down. And yeah, so I bought in the 20s. So like if you look at the 5-day, I was in here around like 20 something with my position. Bitcoin dropped, and this is where we've been. It just goes down. And then as Bitcoin goes back up, it starts coming back up. Now, one of the things that I do look for is on these dips, because I know why it went down, because Bitcoin went down. I should have been taking the excess distributions I was receiving and purchasing, but it didn't drop until after I got paid and after we had our distributions. Like, it was terrible. Like, we had the distributions, they recovered the distributions, and then Bitcoin went all the way down to 109. And I didn't have any payments coming in that had any excess on them to purchase, which kind of made me sad. But you know, we got there. We're getting there. The strategy's still it's the strategy. We're coming up on a payday week, and if we're still down in the dumps, then this payday might be going into the Granite Shares, but it's still within my pay range. So we'll see. We will see, because if this is still at a steep discount, if we're still sitting at 114 when Friday rolls around, then I will pivot, and we'll probably be making a buy over here, because this is on discount, and the other position that we're currently working on is not on discount, and also its pay rate is currently put it within the payment range that I want, but I always overshoot and go for a lesser amount. I go for like the worst distribution I've seen to date and build my position around that. Now, if a new worst distribution comes out and I'm going to keep in the position, then you have to update your numbers and start buying into that position. But as it sits right now, XBTY, I got $250 today, the 30th, from them. And, you know, so we're still within range. It's just the price is down. The NAV is down. And I'm like, cool. So moving on to the next position. This one's a little bit outside of crypto direct, but they have crypto on the balance sheet, and it's Granite Shares Yield Boost Tesla ETF. So these are both single underlying asset positions. The Tesla one, they're a tech company. I'm looking to get some Tesla shares in my portfolio. That's a goal of mine. Obviously, after I get my MSTR shares, because I do want those more. But Tesla has Bitcoin on its balance sheet, and it's not necessarily that they're buying Bitcoin. They just have it, so they qualify. But also, this one was one of my higher risk. I was like, hey, the share price is low and it's paying well. So that was kind of the logic on here. Plus, it falls under the theme. And I was like, yeah, I'm going to get Tesla shares. So this makes sense. And, you know, this one I'm actually up because I bought this position when it was down a little bit lower. So, like, I'm up on NAV on this position, I think like about somewhere between 3 and 4%. And that's just on the NAV. It's still paying also. And I've had it for weeks. So like I've been building this position up by dollar cost average in chunks, but like dollar cost averaged in, and then used some of the Misty transfer to get into this position, to get this position started as well. We've done a few cash infusions from our Cash App flywheel that I did an episode on and did an updated episode on. I think I've done 3 of them now on how I'm using them. And we've went from the Cash App play. Now it's the flywheel. We're doing what MicroStrategy is doing with a little bit of extra steps because I'm a everyday working stiff. I qualify as a brokey. I am a dusty. I'm 2 dusties put together by the powers of Voltron. So I got to do things a little bit different. Unfortunately, I can't go straight into Bitcoin because I am not at a position where I can live out of Bitcoin. First, we're going to live out of the brokerage. Then we're going to get out of the brokerage and into Bitcoin. That's the way this flows for me. So my flywheel, I got to get more income every time those cash infusions come in. So what we're doing is we are getting the cash infusion going in. We bought this up. This position is solid as it sits right now, as long as the distributions stay kicking me out above 250 or above 250. So both of these pay on Tuesday. So today I got $500 in distribution. Out of those distributions, we got 250 of it, which is 50%. Shot it on over to the Cash App. Go ahead and pull that out of the brokerage, send it to the Cash App, and paid down $250 worth of our Cash App loan, which we just pulled the loan. We're already at almost 50%. So when next week rolls around, and I mean, we still haven't hit Friday, so there'll be another 125 going in from that going into next week. And then Tuesday rolls around. If distributions stay up, we'll be getting another 250 kicked out to it. Oh, we're just going to keep it rolling. And since that's only 50%, the other 50% is going towards paying down our margin, which is we're converting the debt over to margin. But Tesla is my second one, and my third one that I've got eyes on. I know this one's going to come in as crazy because they're going to be like, well, you sold Misty. But Granite Shares also has a MicroStrategy single stock pair that's brand new. They don't even have updated stuff on here right now. You can't even chart this thing. There's nothing in there. MSYY. Now, why would you be bringing MicroStrategy back in? Because I'm long MicroStrategy. Because I'm going to be getting back. I have to buy back my 10 shares of MicroStrategy stock. I don't understand why that's so hard to understand. Like you don't have to get emotionally tied to these positions, people. You don't. The NAV went down, the distribution went down. MSYY, the distribution's already higher. It's a weekly payer. It pays on Tuesday. I'm about to be getting a fat check every Tuesday, and I'm here for it. Plus, the share price is down right now. So while we're in this like bearish market, this is a great opportunity. If you want monthly income, which I don't understand why you would want to be locked into bad calls for 4 weeks. It just doesn't make sense to me. After I understood how weeklies worked and the benefits of weeklies, it's not even about getting paid weekly. It's not being stuck in a bad position every week. Like, I don't know if people understand that, but like if your calls go south in Misty and they at the beginning of the cycle, they put in bad plays, it's over till the next cycle. Like you're stuck with that. Like you just got to eat that. I don't like that. So MSYY, I like the way all of my other Granite Share positions are functioning. MicroStrategy being in a bearish trend right now. The sentiment's turned. I see the people on Reddit. Everyone's crying. That's a good. Everyone hates MicroStrategy. Great. They're about ready for their next leg up. Then that's what I see. And in that, having this position to kick off income for that run back up, which, everything's going to run back up. Misty is going to run back up. Do I know if it's going to get back up to 40s like it was? I don't know. If their calls all hit over those 4-week windows, great. MSYY, I've got a little bit more faith in that. MSTW, IMST's been doing pretty well. They're still holding a pretty decent NAV, but it's a monthly payer. So like what they're doing, they're stuck with it for 4 weeks, and I don't like that. That is not something that I am a fan of. So MSYY is on my radar. I've got it sitting on my active list for after I finish getting the rest of my TSYY shares, because even though TSYY is kicking off 250, I am going to get my 1,300 shares because that's the amount that I need to have my overflow. And I would rather have that overflow coming in than not, because we can put that to good use. And that could be what goes into the MSYY position. Who knows? But yeah, we're gonna be looking at those positions, 2 of which we're already in. The second one almost completed, and once that's completed, we'll have all the excess overflow will flow into MSYY, and we'll start building that position up and just have it on drip. And then, there is one more. There's one more position I want to show you. I got a bonus. I got a bonus for you. Okay. So we're jumping into this one. It's blocks. Now, this is going to be eventually what it's going to be my balancer. Now, this is a weekly income, but it's Bitcoin, Ethereum, and then crypto industries as well. I like it. Like we're on there. It's been pretty NAV stable. Like this fund actually cares about the NAV. Since inception, it's up 13%. 1 month down 3.5%, but it's trending over the NAV. Do they have a quarter end? They don't have quarter end yet. But you're getting it's like 20. It's like $20. It's in the 20s right now. That's the range that I'm looking at, and it's paying 16 cents a share, which that's not bad. That's not bad. It's definitely one that drags down the distribution percentage for me, obviously. But you have to have funds in there that are stable. Everything else that I'm doing is highly volatile. This goes in with the theme of crypto, and it is not swinging 10% when Bitcoin goes down. And that's what we're going for, is something that's consistent, but also it's in the income portfolio. So this is income related. So what we're going to probably start doing is I will probably, starting this month, I think was what we're going to implement in that portfolio. And I know we went deep down the rabbit hole into portfolio, but like from a portfolio structure perspective, this is going to be one of the things that I put in my portfolio to help boost my margin. And it'll be on indefinite drip into itself. It won't be something where I'm like, hey, I'm taking this income as well. But I'm probably going to start buying. I'm going to commit to purchasing a share a month. You know what? I'm going to commit to purchasing 2 shares a month and just kind of backfilling my portfolio so that way it's in there dripping. And then after I get all my positions going and we get to $1,000, $1,000 a week. I mean, that's a crazy goal. But it is my goal, is $1,000 a week. And once we get to $1,000 a week, whatever's coming out of the overflow, and for reference, $1,000 a week is literally 4 positions producing 250 a piece. I have 3 right now, so I just need the 4th position. MSYY will likely be that 4th position, and once that is up into the 250 a week, I'm sure that I'll have some weeks where something's a little bit low and we'll have to buy up a little bit maybe, but overall the excess of $1,000 will also flow into blocks. I'm also going to try to have a 5% of my portfolio position in blocks and 5% into stretch STRC from MicroStrategy, and that's going to be my opportunity fund. So that's if something is on a massive dip, I can tap stretch and use those funds. I can sell that off, use those funds, and use it just as a high interest cash bearing cash position in my portfolio. Blocks will be the other, because they say portfolio structure, you should have a cash position of 10% of the portfolio is just being responsible. I don't like inactive money, so I'm splitting it between blocks and stretch. Obviously, both positions will be on drip, and we'll do that. Actually, that's what we're going to start doing. We're going to start forcing cash positions. That's what we're doing moving forward. 1 share of blocks, 1 share of stretch every month. That's going to be part of our monthly, and we'll just pull it out of the margin, call it what it is. Just is what it is. We're going to have it in there. So that's what we're going to do. I think I'm wrapped up on this one. This one's been a little bit of a long one. Little bit of me ranting about things that aren't crypto but are crypto, because crypto is bled into everything. This is adoption. This is what adoption looks like. Now, does that mean I believe in the fiat system and I think TradFi is the greatest? Absolutely not. But for your everyday Joe who can't go out and just buy a whole Bitcoin, can't buy a few Bitcoin, can't just live out of Bitcoin right now, we've got to get out of the W2. And for me, that exit strategy is to get into my portfolio, and then we can start having the same conversation that we're having about getting out of the W2. It's an evolution. There's levels to this. Level 1's your work, W2. Level 2 is getting out of the W2. Now, you can go build a business and do that, but most of you just build jobs, which also, I mean, you might as well just be W2 at that point. Like, it's the same thing. You build a job, then you can get out of the job into your portfolio. So I'm just skipping level 2. I'm just going straight to level 3 because I'm already almost there. I've got enough capital in there. If you can't, then you're going to have to either get a side hustle until that your brokerage becomes a side hustle. That's what I did. Now we're almost to where, hey, your side hustle can become your job. Well, my brokerage now will become my job. And then I need to get out of the brokerage as soon as possible and into Bitcoin. And that's going to be the next game. And eventually it'll just be me flywheeling from Bitcoin to the brokerage, producing income, going back into Bitcoin, buying more Bitcoin along the way, and building up that base of Bitcoin that I can borrow against. And hopefully as we do that, we'll continue to get more services, more Bitcoin-backed products, more crypto-friendly things. Hopefully they start letting us do stuff against ETH. That would be awesome for me too. But right now, the adoption's on Bitcoin, so that's where we're setting our sight. We always want to go for the highest target, and Bitcoin is the soundest money. I think Ethereum's dope also, but I don't have to mince words with that. Like Bitcoin's home. All roads lead to Rome. They're all leading to Bitcoin. So something to think on. Hope you guys enjoyed. Hope you guys got some value out of my ranting. I definitely got some clarity. We definitely made some tweaks to our strategy in the income portfolio, our primary one moving forward. So thank you guys for that. You helped me talk through the thought. And I was like, yeah, you do need to start building up your cash reserve, idiot. Like, yeah, duh. Like, you should have some cash in there. There we go. So this is how I learn. This is how I fine tune my strategy for myself. And obviously at the my monthly updates, you'll be getting some updates in regards to that came from this conversation. So that's the other reason. The main value that I get out of this right now is those epiphanies. So thank you again. Don't forget to hit that like. Don't forget to subscribe. And when you do subscribe, don't forget to hit that bell notification and turn it all on. For those of you who made it this far in the video, don't forget to drop a comment for me down in the chat. I do reply to them. I do read them. I do value them. Also, lastly, don't forget to share the video. Share the video. Get me out of that algorithm, people. I'm ready. I'm ready for it. Let's go. Till next week, this has been another awesome episode of Crypto Portfolio Updates. It's your boy Reckless Ray Dinero, and I'm out. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play it, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.